What are you expecting in outcome related to this?
Funny enough, yesterday the Fed Watch had it at a 50-50 ratio of them actually holding rates. So today, though, we're down to about 70% of them actually going back and cutting rates. So it kind of might be a mixed bag, but what we're thinking is maybe they're going to lower rates and kind of boost the market and the economy a little bit more.
Hey, TG, Kristen here. I wanted to know how concerned you are about the rotation we're seeing in the market right now away from momentum and towards value.
Oh, it's a huge rotation. In fact, there's been a big decoupling. We've been looking at a lot of things. A lot of leaders have been coming down, getting money pulled out of them as they rotate and actually get stuff put more back into value, trying to figure out where people can put that money and actually see things coming off of the ground, off the floor, kind of those bottom feeders, and looking at them actually seeing if we can get some more percent growth out of those.
TG, it's Julia. We keep going back to the U.S.-China trade talks, and they're set to resume next month. We still haven't seen a deal. It's been going on for 2.5 years. So do you see any sort of end in sight, and how are you thinking about that?
Well, it sounds like for now, Trump has held off on those reports and some of the more harsh language as far as the trade deal goes, probably until the new year. Wants to get through Christmas maybe, and with the holiday season is what we're kind of picking up on. He just wants to keep things cool and make sure, but keep that constant pressure on the Chinese so that we can eventually work something out and get a deal and really get everything back on track. I think there is the best interest, but we're going to have to go through some difficulty first in order to get through that.
Hey, TG, so stocks are near record highs. We have a lot of uncertainty when it comes to tariffs and the trade war, and also we have the Fed decision. So there are a lot of catalysts right now for the market. If you're an investor and you want to put fresh money to work, where are you seeing the opportunity?
Actually, some old kind of blue chip stocks. We've been seeing some of the retail stuff, actually clothing, like maybe Fossil and some of the clothing brands, Macy's. A lot of those have been beaten up over a long time. And when you try and go back and actually find value for stocks and growth, you want to find the ones that have been beaten up for a long time and actually have room to run. A lot of the old leaders, kind of like maybe TTD and maybe even Facebook and Amazon, those have been up for so long that people have realized that maybe there isn't much growth potential left in them, and we actually need to move down to other ones. And some of the other ones we've been seeing as potential growth is Tesla and then some Chinese brands like IQ and LK.
So, TG, I want to look backwards just a little bit. Some people have been drawing parallels to the market in 2007. I'm wondering if you see those parallels and if you think that there's some recession risks that we're ignoring.
Well, I know everybody's been talking about the inversion yield, but right now we've been looking at the market internals, and so far everything's looking all right. And really, if we can kind of get past this Fed meeting with the FOMC, and if the market wants to make new highs, it's hard to kind of ignore new highs. And as long as the market keeps trugging along, we're going to be okay, and that's what we're going to be looking at.
All right, TG Watkins of Simpler Trading, thanks so much for joining us today.
Thank you.